Geopolitical tensions are rising, and global risk sentiment is beginning to shift ahead of Monday's session.
GDP growth is moderating, and options traders are aggressively building resistance above Nifty, increasing volatility risk at the open. Before we continue, please subscribe and share this video to help spread awareness and save others from cyber scams. Nifty options data reveals early signs of structural pressure as open interest and positioning begin to shift. On February 26, call open interest was significantly higher than put open interest, indicating overhead resistance formation. On February 27, call open interest saw a sharp increase of over 900 lakh contracts, while put additions remained relatively small. This aggressive call writing above the current spot level indicates increasing overhead supply and a potential downside bias in the near term. With the put-call ratio falling below 0.5, call positions significantly dominate puts, indicating weak downside protection. The continued decline in PCR alongside falling prices confirms increasing downside pressure and strengthening bearish sentiment. Over the weekend, geopolitical tensions escalated significantly, shifting global risk sentiment ahead of Monday's trading session. Israel initiated direct military action, marking a major escalation in regional tensions. Global leaders have begun responding, increasing diplomatic pressure and adding to uncertainty. President Trump delivered a strong public statement, further amplifying geopolitical uncertainty. Energy markets are expected to react first, with crude oil prices likely to see upward pressure. Heightened geopolitical tension typically results in volatility expansion in equity markets.
Foreign institutional investors may adopt a cautious approach amid rising global risk.
For Monday's session, the probability of a gap opening increases significantly. With heavy call positioning already visible, geopolitical stress adds to downside vulnerability. Traders should closely monitor crude oil prices, the rupee, and global futures before the opening bell. If tensions remain contained, markets may stabilize quickly, but broader escalation could trigger sharper corrections.
India's GDP growth for the latest quarter has moderated to 7.8%.
This compares to 8.4% growth recorded earlier, indicating sequential moderation. For markets, the direction of growth matters more than the absolute number. When valuations are elevated, even minor growth slowdowns can increase market sensitivity. Investors may reassess growth assumptions and recalibrate risk exposure. Cyclical sectors such as banking and capital goods could face near-term pressure. When slower growth aligns with geopolitical uncertainty, downside risks tend to amplify. For Monday's session, sentiment is likely to remain cautious at the opening bell. In the short term, volatility and consolidation risks increase under such conditions. As of now, Monday's outlook suggests elevated volatility with a cautious downside bias. Share this video. Save someone you love. Stay safe, invest smart.